Donald Trump has secured a historic re-election, sparking significant market movements across stocks, currencies, and even crypto. But what are the actual impacts of this shift? Today, we'll break down what a Trump presidency means for key sectors, global trade, inflation, and where markets may head next. First, let's look at the immediate impact on U.S. stocks. Following Trump's victory, U.S. markets surged, with the S&P 500 and Dow Jones both posting record highs. Historically, markets favor Republican wins because they often lead to lower corporate taxes and less regulation, which boost corporate profits. But this time, we're seeing specific sectors benefiting even more than usual. Energy companies, especially fossil fuels, are likely to thrive under Trump's drill baby drill approach to oil and gas. Companies like ExxonMobil and ConocoPhillips are already seeing gains as investors expect regulatory rollbacks and expanded domestic production. Financial stocks like JP Morgan and Citigroup are also benefiting. With Trump likely to ease banking regulations, financial institutions could face fewer audits and enjoy greater freedom in business expansion. And, as expected, defense companies such as Boeing and Lockheed Martin are up. Trump's hawkish stance on national security signals more spending on military infrastructure and defense initiatives. Next, let's talk about global trade. Trump's commitment to tariffs, especially against China, has reignited trade tensions. This could mean higher import costs, potentially driving inflation as companies pass these costs on to consumers. In particular, China's exports to the U.S. may face a 20% tariff increase, which would add significant friction to global supply chains. We're also seeing a stronger U.S. dollar as a result of these tariffs. Historically, trade restrictions tend to push the dollar higher as it strengthens against other currencies like the euro and yen. While a strong dollar is beneficial for American consumers and dollar-based investments, it's challenging for international markets, especially those with dollar-denominated debt. So, while the U.S. economy could experience gains in domestic-focused sectors, global trade tensions and higher tariffs introduce significant risks. Trump's proposed tax cuts and increased government spending are likely to drive inflation, impacting the bond market. As a result, we're already seeing a rise in 10-year Treasury yields, which signals potential inflation ahead and higher borrowing costs. This could put pressure on the Federal Reserve to adjust its rate policies. With bond yields rising, we could see higher interest rates to manage inflation. This has a ripple effect across the economy, impacting mortgage rates, credit costs, and consumer spending. But for now, markets are cautiously optimistic, waiting to see how the Fed responds. In an unexpected turn, Bitcoin has surged to an all-time high of $75,000 following Trump's pledge to make the U.S. a leader in digital assets. This is a major shift from his previous stance, which was highly critical of cryptocurrencies. Now, with Trump promising a more crypto-friendly environment, digital assets like Bitcoin and companies like Coinbase and PayPal are experiencing significant gains. Trump has hinted that he might replace current regulatory heads with crypto advocates, which could drive further adoption and innovation in the digital currency space. For investors, this could mean a new era of growth for digital assets within the U.S. market. Global markets have responded in mixed ways. In Japan, the Nikkei surged over 2% as a weaker yen benefits Japanese exports. European indices like the FTSE rose in early trading, but eventually dipped as trade uncertainty weighed in. China, however, has seen a different outcome. With fears of new tariffs, Chinese markets like the Hang Seng fell as investors braced for potential export restrictions. These mixed reactions reflect varying levels of exposure to U.S. trade policies, and while some markets may benefit, others are positioned to face challenges in the coming months. So what's next? While the markets are responding positively in the short term, the long-term impacts of Trump's policies remain to be seen. Key sectors like energy, finance, and defense are likely to benefit, but increased inflation and tariffs bring risks for both U.S. and global markets. Investors are advised to stay informed and focus on the fundamentals as we move into a volatile period. Thanks for watching, and don't forget to subscribe for more market updates.